All right, you're welcome. As I said before, I'm going to be teaching you some very beautiful things. And today I'm going to be sharing with you something very amazing. I'm going to be sharing with you how to approach day trading. One thing I know about many traders is that they come into the market and they don't exactly know whether they are scalpers, whether they are day traders, whether they are swing traders. And the truth is, a majority of people day trade without even realizing it. So let me show you the exact way you can make the most out of day trading. So let's get straight into it. So we have our charts right here, and I'm looking forward to taking a trade. So if you're a day trader, the first thing you want to pay attention to is the time that you are trading. So you want to trade the London session or you want to trade the New York session. So the London session starts by 8 o'clock, the New York session starts by 1 o'clock. Yeah, sometimes 2 o'clock, depending on the daylight time saving. All right, so we have the London session, we have the New York session, and here is also the Tokyo session. So you can make use of an indicator. You can go to indicators, look for the Lux Algo sessions, and then you want to look for London. You want to click on the London and ensure that the New York is off. So it can help you guide you as to when the London session begins. So we see the London session begins here, the New York session begins here, but you don't really need it as much. Once it's 8 o'clock in the morning, the London session begins. Once it is 2 o'clock in the afternoon, the New York session begins. So what am I looking out for if I want to take a trade? So I wake up in the morning, sometimes 7:30, and then what I want to look out for is I want to look for entries to take a trade. I may take a trade long or I may take a trade short. Remember, trading is all about probabilities, and I'm looking forward to taking advantage of that probability. Okay, so the time frame you have to make use of is the 15-minute time frame as a day trader. All right, so I navigate between 15-minute time frame and the 5-minute time frame. So let's imagine that this is 8 o'clock. So what I'm looking out for is my strategy. By 7:30, I'm looking for opportunities to take a trade, because if you wake up by 8 o'clock in the morning, you are late. The market begins with very great speed by 8 o'clock. So you want to make sure you are prepared before 8 o'clock to trade. If you are trading the New York session, you want to be in the market, you want to be in front of your chart 30 minutes before the New York session opens. So I'm trading the London session. Let's imagine I'm trading the London session. So what I want to do now is I want to mark out my areas where I'm looking forward to taking a sell or looking forward to taking a buy. So first, I want to mark out my order block. So I have an order block resting right there. So I have an order block resting right there. And the order blocks that I choose them based off the fact that they have fair value gaps resting below them. So if I have a fair value gap with an order block above it rather, I'm looking forward for a sell. Okay, but I'm not just taking a sell trade because I don't want to take a sell trade because I just like the order block. No, I look at the trend. You notice that the trend has been coming down of late. So we have a strong trending market to the downside. So I'm looking forward for an opportunity to sell. Remember, they say the trend is your friend. So I want to take a trade according to the trend. So I look for an order block. I'm telling you my own strategy, okay? I look for an order block. I look for the order block that has a fair value gap with, below it in the case of selling, and then I want to put my order right there. So I want to go short somewhere around here. Now, here's the thing. I'm looking out for gaps, which is this gap right here. Let me zoom in so you can see it. So I'm looking out for fair value gaps, which is let me zoom in. Okay, so we have this very small fair value gap right there, and that fair value gap has an order block, which is this order block. So that is what I'm interested in. So if I want to take a trade, I'm taking a trade around that fair value gap. and then my stop loss is going to be above, and then my target is going to be risk reward ratio of 1 to 2 point or 1 to 3. All right, so now if you have not watched the video I made before this, I talked about risk reward ratio and how you can know what risk reward ratio to make use of. Now the reason why I'm making use of a risk reward ratio of 1 to 3 is because the market is trending in the sell side, so I have the there's a tendency for the market to move very well towards a 1 to 3 risk reward ratio. But if I'm trading counter trend, I want to ensure that I limit my risk reward ratio, I reduce it minimally, because I'm trading against the trend and the market can move against me very quickly. All right, so I look out for my fair value gaps, I look out for my order blocks, and then I want to take my short position right there. My risk reward ratio 1, 2, 3. All right, so I don't just take a trade because of the fair value gaps or because of the order block. I want to look for areas of liquidity. Right, you must have heard about liquidity if you have been trading long enough by now. Liquidity are areas where people are selling or are buying. So we have areas of liquidity which can be a high or a low. So we have this area of liquidity. So the easiest way to get liquidity is to make use of your line chart. All right, so we have this area of liquidity. People are already selling. Now let me explain what that means. People are already selling. They're expecting the market to keep on moving down, so people have started to sell right there. But you, as a smart trader, you know that as people are selling there, there's a tendency for this to happen, and then we can have a push to the downside. So you know that the market does not automatically start coming down immediately. There must be movements taking people out of their trades. So you want to try as much as possible, since the odds are stacked against traders, you want to try as much as possible to trade smartly. This is why they call it smart money trades. So you want to trade in a smart way. The fact that you are trading smart does not exactly mean that you're not going to lose trades. Of course, you are going to lose trade. This is where your risk reward ratio comes in, and this is where probabilities, your win rate, comes in. All right, so I'll be creating a video about win rates in consequent times, so just make sure you subscribe so that you don't miss out on any of the videos I'm going to be posting after this one. All right, so this is my liquidity. As I said before, for you to be able to take a trade, you want to check out for the gaps, you want to check out for order blocks, and then you want to look out for liquidity. So this is liquidity, and just in case you may not really see or know where the liquidity is, I've made it quite easy for you. So you can make use of the line chart. Go to chart type and click on line chart. So once you go to line chart, you'll be able to see areas of liquidity quite well. So once you see the highs like this, these are areas of liquidity. You check out lows like this, they are areas of liquidity. So all of those spikes right here, they are areas of liquidity. So come back to my candle. Yeah, so these are areas of liquidity. It becomes easy for me to see areas of liquidity with the line chart. So that being said, the next thing I want to talk about is I want to talk about stop loss and take profit. Now the question people ask is, where should my stop loss be? Where should my take profit be? In fact, I'm going to dedicate another video for that particularly. But as a day trader, your stop loss should not be more than 20 pips. I always advise your stop loss should not be more than 20 pips, because on an average day, the market does not really move more than 100 pips, except you are trading pairs like JPY, you are trading pairs like CHF, which moves really fast as well. USD does not really move too fast, except probably on news events. So you want to take note of that very well. So I want my stop loss to be 20 at most. I make use of 15 particularly, and my target can be 30. That way your trades can hit quite easily and you are done with the trade. So this is why it is called day trading. You want to spend no more than 4 hours on a particular trade. But people call themselves day trader and they are holding on to trades for five days, 6 days, 1 week, 3 weeks. That's not day trading. All right. You want to take a trade today and make sure that it is closed that same day so that you can sleep. A lot of people trade and they can't even sleep because their trades are on and they can't comprehend sleeping while a trade is on. So it's better you just work with day trading. If you are the kind of person who can't sleep without closing out your trade, you are most likely a day trader and you should fix your strategy, or you should fix your composure and make it suitable for day trading rather than swing trading. All right, don't do what everyone else is doing, do what works for you. All right, so I've talked about your stop loss. Stop loss 20 pips. Your target can be 40 or 60. Your stop loss can be 15, and then your target be 30. So that being said, we've talked about your areas of interest, we've talked about liquidity areas, and then the next we are going to be talking about is what do you do after you have closed out on the trade. Now, this is very important. What you do after your trade closes is just as important as what you do during the trade and what you do before the trade. So we have the pre-trading routine, we have the trading routine, and then we have the post-trading routine. What do you do afterwards? What you do afterwards is very important. Some people, after they have closed their trade, they start looking for opportunity by 5 o'clock in the evening. What are you doing? What are you doing looking for an opportunity by 5 o'clock? The day is almost over. So do you plan on holding it till the next day? You are not a swing trader, you're a day trader. So once you take a trade and you see that that's it, you end it for the day, and then you look for another opportunity the next day. All right. So that's as simple as that. So what do you do? Do you read? Do you talk to a friend? Do you do something else? Because the more you stay at the chart, the more temptation there is to actually start looking for new opportunities. So you want to, as much as possible, avoid the temptation of consistently looking at the chart. Okay, so that's what I look out for anytime I'm looking forward to taking a trade. Okay, so that's all that I have to say. Pay attention to the time frame. I make use of a 15-minute time frame. I check out for gaps, check out for order blocks, and then I look out for areas of liquidity. I set my order based on what I see the trend doing. So if the trend is actually bearish, I'm looking for to sell. All right. So if the trend is bullish, which is going up, I'm looking forward to buy. Basically, I make use of pending orders. If you don't like pending orders, you can make use of mechanical entry, which is just enter your trades once you get to your areas of interest. Whichever one is fine by you. There are many things that you have to check out for. There are many things you have to consider before whether or not you're taking a trade immediately you get to your area of interest, or you're waiting to get a confirmation to take that trade. I hope this video was very impactful and made some sense to you. If it did, please do well to like the video and share to someone, and don't forget, please and please, to subscribe to this YouTube channel. A lot of beautiful things are going to be coming up on this channel. So we're going to be talking about a lot of things, from my experiences to the people I've worked with, and then about the charts and risk management, trading psychology. And feel free to ask questions. Whatever question you think you can ask me. You can ask in the comment section. I'll do well. If I'm able to create videos concerning them, I'll do just that. If I'm not able to create videos concerning them, I'll do well to respond to you. Thank you, and have a wonderful day.